A normal real estate market, go figure. That is exactly what we needed, right? Those unicorn COVID years, we call them the unicorn years, right? Couldn't continue. They were abnormal. If you want to, as an agent, and if you're an agent out there, if you want to compare whether your business was up or down, look at your sales numbers in 2019, compare it to last year, which was a normalized year, and that'll tell you whether your business is trending up or down. Members of the general public, this stats video is for you guys, just to look at projections, what's going on currently in the market, and what we think it's going to look like in the months and years ahead. Your realtor, Steve Pugh, HPR Group, EXP Realty out of Central Florida. And as I said, a normal real estate market is exactly what we needed, and that's what we're getting. So average interest rates as of the shooting of this video today, February the 15th, just over 7%. They have ticked up. Made a couple of notes here. So they have ticked up. Fed just released, actually, it was a survey, I think, by Chase, that we do not anticipate, because of the newly released inflation numbers, and that inflation is still higher or higher than what they expected. Those spring interest rates in terms of reduction or relief, it doesn't look like we're going to see it, right? Rates did come down. We were in the mid sixes. They did bump back up as of the recording of this video, February the 15th. We're about 7.1 right now as an average interest rate. That could swing a little bit in the months and weeks ahead, but we are not expecting, when the Fed meets, to see any rate reductions as we originally thought. Let's jump right in on the screen share, because I want to share this and I don't want to drag this video out for you guys and you guys fall asleep on me, right? So noteworthiness, okay? Check out some of these numbers. We've got an average days on market. There's a lot of numbers going on here, but if you can see, we've got November in this square right here, December and January. I wanted to get them all side by side to give us a comparison. So if we look at average days on markets ticked up, 43 in November, 48 in December, 54 in January. Inventory, we've gone from 4.3 months in November to 4.1 inventory. The amount of homes for sale actually went down in December 23. But now ballooned up to 5.4. Remember, that transitionary period between a buyer's and a seller's market is between that 5 to 7 month inventory, right? Once we cross over 7 months of inventory, we're officially in a buyer's market. So we're making our way up there. Obviously, inventory levels are still, it's considered the shift. I'd still consider it a seller's market, but definitely rising, right? Look at average price point. So November, 463, just over, 467 in December. And now we've seen that average price dip back down in January. Sorry, these pop-ups keep happening, but down to 456 is our average price point. So a little over $10,000 in terms of average price point reduction. So just something to keep our eye on. We do see inventory levels rise generally in spring and summer. So we're just gonna have to see where they fall when they come out in February. So we hit average price point, days on market. Let's look at listing sold activity. So listings sold in November, 12,000. Comparable in December, also 12,000. Listings sold January, 10,000. So we're $2,000 units down in January versus November and December. Pending sales, though, which were interesting. Pending sales in November were 14,000, 13,000 in December. Pending sales in January, 18,000. So that is a sign of things to come going into February. I think maybe we saw a dip in numbers in December. We do historically anyway because of Thanksgiving and Christmas. But if we've got 18,000 units pending in January, it's going to be interesting to see what those sold numbers look like in February compared to solds of November and December. What else did I want to hit on? Active listings. You can see we've got 52,000, 51,000, and then 55. So similar there. Average sales price, we hit pending, and we hit listings sold. So that was it there for the Stellar MLS. And just remember, this is Central Florida stats, right? Lake, Orange, Osceola, Seminole, Polk counties. So we'll skip over lakefront stats. The narrative, 1 in 4, 24% of Americans think prices will go down over the next 12 months. I don't want to seem biased. It's an election year. Anything is possible. I don't have a crystal ball. In my professional opinion, as I've said since day one, I think we're looking at a normalized rate of appreciation between 3 to 5% year over year, right? So this time next year, we're looking at approximate 3 to 5%. We're not going to break any records. Normal real estate market, 3 to 5% appreciation year over year. Percent of home price appreciation over 30 years, 297%. You owned a home for 10 years, 103%. You own a home for 5 years, 54% appreciation. Year over year has been 7% on a national level, right? Year over year from this time last year. Just remember, this is a fun stat, right? For every 10-year period that somebody has owned real estate, it is always appreciated. The only time it didn't is between 2005 and 2015 because of the recession. So for every 10-year period somebody's owned real estate, it's always appreciated, apart from that 10-year period in that. So home price forecasts, we've got all the big boys, Goldman Sachs, MBA, Zillow, Mortgage Bankers Association, Fannie Mae, Freddie Mac, the National Association of Realtors. Realtor.com has it at a 1.7% decline year over year, but it's kind of in line with what I'm saying, just shy. The average of all 8 is 2.7% year over year. New home sales. So they're doing well. Surprisingly, this surprised me a little bit. January of 21, they were peaking higher. You can see as of January 23 going into the end of 23 that these numbers have trended up on this end of this chart here. So it's going to be exciting to see what those new home sales look like going into February. New home sales by price range, majority of those, this was interesting here, the majority of those sales prices took place between 300 to 400, and then another large segment between 500 to 750. So I thought that was interesting, something of noteworthiness just for you guys to look at. And where are we? We need to go forward, Steve, not backwards. New homes selling fast. And that is quick. From completion to sold, average as of December, 2.6 months. So from when the builder completed the unit, 2.5 months later, it was sold and closed. So it's pretty dang quick. Total home sales, obviously they're off 21, which is interesting. Marginally down from 22, but they're still doing well. You can see that 21, new home sales were a huge part of what was going on in that 2021 real estate market. Percentage of distressed property sales, fractional, right? Go back to 11 and 12, tail end of the Great Recession, and those percentages were a lot higher. Come in, you can see the barometer here is set around 4%, which is, I can't see that, January of 2020. And you can see that we're lower than 4%. So I would probably safe to say somewhere around 3% as a percentage of distressed property sales in terms of sales in general. So very low numbers there. New home monthly inventory, 8-month supply, which is surprising considering how quickly these new homes are being sold. Obviously, we've got fewer units exchanging hands or selling. Maybe that's why the inventory levels have crept up to an 8-month supply. And then showing index. So this will track the number of showings taking place in the real estate market, or the showing request per se, right? So December of 22, 122, I think this is in thousands, I'm not sure. No, it's got to be millions. 122.2, and then fast forward a year, 121.6. So the amount of showing activity is comparable from year over year, despite, which is interesting, despite the higher rates and the quote unquote lower buyer foot traffic, these showing requests or showing time numbers are still pretty high. And then mortgage rates, as I said, we're at 7.1 as of today. No, there will be no relief from rates going into the spring, but when Fed meets towards third and fourth quarters, at least at this juncture, we do anticipate some rate reductions. And then ending up 2024, just marginally above 6%, right? So there you go, guys. I pray and hope that this information you found of value and is helpful to you. If you need additional information, you can reach out to us directly. And make sure you subscribe to our newsletter. The link will be on this video. And we appreciate you taking a few moments to watch your Realtors DPU HBR Group eXp Realty. Thanks for watching, and have a blessed weekend and a blessed week. Thank you.